What's going on? You guys already know who it is. Your boy Bobby from Mentourme.com. I want to say this, man. If you guys are not understanding what's going on in this stock market, there is so much opportunities right now. People, I'm hoping that the stock market continuously crash. We're down another 700-800 points. I mean, if we could keep going in this route, this might be a great opportunity for a lot of us to make a whole bunch of wealth. People, I'm so proud of all of you that are booking one-on-ones, webinars, and coming out to the shows and just really learning how to really start investing. And again, guys, I want you guys to understand if the real estate market crashes, okay, this will be another 2008 where there's opportunities everywhere, endless opportunities to make money. Now, the question is, are you prepared? I did a video about being prepared about 2 years ago. Today, I'm going to talk about how do you be prepared? Because again, the opportunity seems like it might be coming soon. First, you want to have liquid funds, of course. The goal is to, of course, have disposable income ready to go when it's time, okay? Number two, you want to have good credit because, again, you want to be able to leverage at 1% or 2% interest rates. Hypothetically, you bought a home at 4% or 5% and you had a 30-year loan. What's smart to do is this. I would actually refinance the home. Hypothetically, let's say the interest rate now would be 1%. I would refinance the home at 1%, refinance it to 15 years instead of 30 years at 1%. So it's important to understand your credit is going to be a very essential component to, of course, enjoying the opportunity that could come if the real estate market crash. Number three, understanding what is a deal, okay? A lot of you don't realize when you're investing into real estate, especially when the market's down, it's not just buy and flip. That's one way to create different streams of income. Another way is buy and hold. That's the best time to buy and hold, because imagine you bought a property at $50,000 on credit, whatever the case may be, and you're renting it out, I don't know, $1,000 a month. And that property, let's say a couple months ago, was just worth $350. You buy 5 of those. Do you understand? In 5 years, you're worth maybe $1.8 million. Do you understand that? Why would I sell the property? A lot of you don't realize when the market crashes and there's an opportunity, you're buying a home at a discount. Instead of buying a home at $350, you're buying it at, let's say, $100,000. It's important to rent the property out. If I were you, make sure you do your due diligence. Rent the property out for, let's say, $1,000 or $1,500 a month for the next 5-6 years, because that $100,000 property every year is increasing in equity and value. So imagine you bought it at $100,000, 2 years later it's worth $150. 2 years later, now it's worth $250. 3 years later, now it's worth $400. You won. And imagine you have 4 of those, you're worth almost $2 million. People, it's important to understand, get prepared. Because again, the minute these markets properly crash, if they do, the stock market, the real estate market, the cryptocurrency market, don't do like everybody else and start running away. What you should be doing is pouring your money in and making sure you do your due diligence. Do your homework first, people. Make sure you understand what you're investing into and source the information from the person who actually knows what they're doing. This is your boy Bobby from Mentourme.com. People, make sure you're paying attention to CNBC. I'm telling you, shouts out to that company, Bloomberg. Shouts out to, of course, Michael Bloomberg himself. Shouts out to all these individuals who are giving us gems. They're keeping us informed on what's going on in a macro level when we talk about the economy as a whole. A lot of you need to pay attention to, of course, these type of stations, because they're educating you on what's going to be your next move if the market crash. Mentourme.com, people.